Today, we are getting all of your tax questions answered. In the beginning, when the first few years of my business were going on, the idea of taxes and how to optimize them was completely over my head until I found someone who was like a pocket secret weapon. And today I'm bringing her on the show and I'm going to ask her some of the most frequent questions that you have so you feel confident as you enter tax season and as you scale your coaching business. Welcome to the Best Damn Coach podcast. I am very pumped about this episode because I feel like I'm bringing on a secret weapon to success for my family, and that is I think you use this title, tax strategist. Do you use that title?
Yes, absolutely.
I
Yes.
think it's so important to highlight that because if you've worked with the CPA, this is not you. I just feel like you have this amazing knowledge base. You've taught Justin and I so much. So I'm so excited to bring Cindy on, our tax strategist, and talk all things taxes today. So welcome.
Thank you. I appreciate being here.
Yeah.
Yes, I love taxes.
I know, which is so funny, right? Because most people get that word taxes, hear that word taxes, and it's kind of like budget or diet. Like they kind of like cringe a little bit.
For the dentist.
Yeah, yes. I actually love the dentist. By the way, I'm the weirdo that loves the dentist. But you've kind of made me fall in love with taxes too. And I'm going to talk about why that is in a little while.
Okay.
But can you just give us, maybe a 90-second or 2-minute
Yes.
overview? Why do you love taxes? What brought you here?
What brought me here was I'm one of 6 kids raised on a farm in Idaho. And I remember my mom and dad they got out the card table and the ad machine and were pulling receipts and all that. And as I got older, I just kept thinking I was doing it right until I took classes and realized I wasn't doing it right. And at that point, I worked for Lockheed Martin and my daughter was probably 10. And when she was 12, I pulled her out of school. We were still living in Idaho, quit my job, and we moved to Phoenix, Arizona and followed my dreams to help people like me that didn't know what they didn't know, because that was the deal. What didn't I know? I didn't know what to be asking, and I thought he was doing a good job. He was probably doing a great job for what I knew, but he wasn't asking, and I didn't know to say anything, right?
Yeah,
So that's what brought me here.
I love it. I feel like that's what, in working with you, why I don't hate taxes, or it's not even that I've hated taxes. It's like this inside anticipation,
Yes.
this nervous belly of not knowing what to expect.
Not knowing.
Yeah, but over the last few years as we've worked together, that's been eliminated because there's constant discussion, by the way, but also you've taught me how to best prepare and what we should be doing and the things to look for, the things not to do, so that there is no like, oh goodness, cross our fingers and pray that there's not this huge check that we owe. And so that's really why I wanted to bring you on the show, is to help educate my audience around the same and to help them feel empowered around this conversation.
Yes, that's probably one of my biggest attributes is that I'm never going to send you a tax return that has you owing all this money. And you would not believe the clients that come to me because their accountant just said, oh, here, pay this 100,000 or this 25,000 or whatever. We're going to either have known about it and talked about it. I want to know your stuff. I want to know when you've made some more money or business has decreased a little bit, or what your expenses are. I want to know that so that we can run numbers to see where you stand all the time. I always want to know. And people are like, I don't want to bother you. No, I want you to bother me. That's the fun part about this, is you can say, well, what if we buy this or we don't buy this? What does it do? And I can give you those numbers.
Yeah, and it's really cool when we connect too. And let's say, it's the end of year meeting, or I should say the Q1, we're coming together in preparation to wrap up this tax season. And you're like, oh my gosh, you're up, or wow, this happened, right? Yes, collaborate, like, more money, better problems to solve. I mean, is actually a really high level problem that I want everybody listening to have in front of them as well.
Yes. Somebody's on your side. And typically that's not your accountant or CPA.
Yeah, I love that. And that's where that like definition of tax strategist comes in. Okay, so I want to go into some very technical questions today that are, some things that I get often in my world, and I usually defer them to you, or the very little bit of knowledge. You've given me a lot of knowledge, but it's not my wheelhouse, right? It's not my job.
Right.
The one place I want to start is this common question that I'm often asked around an LLC versus an S Corp or something else. And by the way, Cindy was on my podcast a couple years ago. It was such a frequently downloaded episode that it was definitely like, okay, let's do it again. Let's roll it back because these do change. But can you kind of walk us through what is an LLC? What's an S Corp? Do they matter to taxes? Why or why not? And how to think about it?
So I'm going to talk strictly from a tax perspective on the LLC, not from a legal asset protection or any of that. That's all. Talk to your attorney about that, and everybody needs that. But an LLC is a limited liability company. So if there's one member on there, we can either file it as an S Corp, a sole proprietor, or a C Corp. I tend to really like S Corps. They seem to be the most flexible as far as the money coming in and out. Partnerships have its own set of rules that you have to follow, and so does the C Corp, where the S Corp is more flexible. Now, I get it all the time. I thought I was an LLC. Yes, you're always an LLC. How we tax you is something different. Now, with the S Corp, once we choose that election, you have to stay that way for 5 years. Now, with that being said, there's always like, well, a maybe, but it's just your best. I had a lady, she emailed me, she said, okay, I'm not going to be it anymore. Well, no, you don't get it. You don't get to go back and forth. We're going to decide. And if I'm deciding for you, and I typically don't ask you, I want you to be an S Corp. You're saving 16% taxes on the profit, right? And so that alone is worth the savings. So I'm going to always make you an S Corp. Now, there are some rules with the S Corp. You do have to be on payroll if you're at a profit. So I have a gal, she emailed and she said, okay, well, I'm still not on a W-2. And I said, yeah, I'm not going to have you be on a W-2 if it's going to put you in the hole, right? But the beauty of the LLC is I can file your taxes any way we want to based on your information. And I might keep you a sole proprietor for a couple of years. Or maybe it's time to make you an S Corp immediately. Now, a whole nother reason we want to be an S Corp. So with the IRS, there are service centers. So your individual go to one service center, partnerships go to a different service center, C Corps go to a different, and S Corps go to a different. What I like to do is keep your personal return as clean as possible. Your personal return is the one that's most audited. So I want to keep it clean, meaning if I file as an S Corp, now we have this separate return that all the IRS sees is that you have this number coming in. And you could have 3 S Corps in a partnership. You could have lots of different things, but it's keeping the personal return very clean, meaning I don't have rental properties on there. I don't have a sole proprietor on there. I've moved everything out to another tax return, right? Because now it goes through a different service center. So you're always an LLC. That's your protection. It's how we file your taxes as an S Corp.
Okay, this is so good. Okay, so I'm just going to break down what Cindy said again, just for clarification, because I know I need to hear things a few times too. Is LLC is really a separate discussion from taxes, to your point. And I'll put in the show notes, you guys, when I interviewed my attorney, Christy, on the show, an LLC, it separates you from your assets, essentially, and protects your personal assets. When we're talking about taxes, potentially, I think, right, Cindy, most people are going to start as a sole proprietor if they're not necessarily as profitable or profitable at the beginning. And then once you hit that personal, that dollar amount, and you can justify enough of paying yourself in a W-2, you move into the S Corp, which I think that's like so many great, benefits.
Yes, absolutely. Now, so let's say my husband has a business and it's kind of taken off, but not really. And our W-2 income is more than 100,000. I would also immediately move that to an S Corp. I wouldn't keep it as a sole proprietor. Years ago, gosh, probably 25 years ago, I went to an audit and I said to the gal, I said, I've never done this before. Walk me through everything. And then what do I need to look for? And she said, having high income on a W-2 and then a loss on a Schedule C as a sole proprietor. That would be an audit, a risk for an audit.
Yeah, okay, I see.
Yeah. So that we wouldn't want either. So I might move you just for tax purposes, just to keep it clean. and avoid audits. It doesn't mean we can't get past an audit. It just means they're looking for money and we just have to go find everything to prove everything, right?
Yeah, so good.
And it's not fun.
Yeah. And so again, this is why, having somebody in your corner legally, especially just in the beginning when you're setting these up and then separate for taxes, just understanding that these are different conversations is really important.
Mhm.
Okay. Now I want to get into like, many people listening right now are maybe new to owning a business altogether in the coaching service provider space. Or I think the other, I would say, bucket of people listening are people that have been doing this for a while, but really haven't paid attention to taxes and are, I think, missing out on like grandiose opportunities. So, can we speak first to probably expenses that they are already paying at for that are tax deductible that they might be missing? Maybe you could give a list of things to think about.
Absolutely. And so years ago when I started this, so this is long before we had things online, right? We were not doing this online when I started. What what we were all doing was selling either Mary Kay, Tupperware, Avon, Jafra Cosmetics was around then, right? Well, the clients would come in and I would say, well, they'd owe a little bit, and I'd say, okay, you didn't sell Mary Kay to your coworkers or Avon or something, and the husband would start to grumble a little bit because she has a closet full of Mary Kay, right? Well, okay, so then I taught them about all these expenses. So not only just the inventory, okay, that's clear. We all understand that. But, well, back then we didn't have cell phones, but it would be the cell phone, the internet. Back then we had fax lines. Um, what am I already paying to keep that I pay every month, right? What expenses am I already paying that now I'm using for this business that I'm running? Whether you're an online coach or working from home, those are the things that I see people miss the most. And the not keeping track of is what causes you to miss them. So let's say, okay, it's already 2026. We're doing 25 taxes. What I would want you to do is go back through your bank statements. I had an email from a guy and he's like, I just don't even know where to start. And I said, okay, print all your bank statements out. Go through them. The beauty of the bank statements nowadays, not like it used to be, is it says your internet provider, your cell phone provider, all your auto. It says Costco gas, 7-Eleven gas, Circle K gas, right? Add up all your auto. So let's talk about that auto. That's a big one. So it's all your gas, any repairs. I pay for a car wash, a monthly subscription to a car wash. That would be deductible. My insurance, then anything I do to that car. So I don't know. I bought a vacuum the other day because I wanted to be able to vacuum, when I was at the office before I ran into work. That's going to be deductible. It's those things that you're spending money on. I didn't buy the vacuum because I thought I wanted to write it off. I bought the vacuum because I didn't want a dirty car, right? So, so the IRS doesn't come back and say, well, Cindy, you already have a membership for car washes. Why are you claiming this little vacuum, right? No, it's my total auto. And that's what so many people miss. And so it's all of your auto. What does it cost to run my home? Now, run my home is separate from my internet and my cell phone. And then within that, did I have any repairs? In Arizona, did you replace your air conditioner this year? That's between $8,000 and $12,000, I think. So those are the things. And it's like, oh, we dug out our front driveway because we had to do this. And then we had to do a new sidewalk, right? So those are all called land development or land improvements to your home where you're working out of all the time. And then years ago, the IRS changed the rules. You can still do it. What's my square footage of my house? And then how many square feet do I use for my business, right? They changed it so that I could do per room. So I have a guy, he sells Amazon. He sells for Amazon. Is that how you say that? I don't know how you say that. Anyway, his whole house. He had to buy a bigger house, right? So now we're going to look at it and not do the square footage, but how many rooms is he using? If he has 5 rooms and 4 of them for business, I'm claiming a majority of that house for his business. Does that make sense?
Yeah, this is so good. Amazing.
Yeah.
Can I add a couple things too that
Yes.
around other things to think about are your like little softwares because in my world we're paying for CRNs, we're paying
Mm.
fees, we're paying project management tools. These are things you're probably paying. I think some of you are thinking about them, but maybe missing them. You're uncertain because sometimes you're like, oh, but I sometimes hop on to take a family Zoom call, but the expense is primarily business, so then it would be
Yes.
tax deductible. Yeah,
Yes.
excellent. A hack that I just want to offer you guys as you're listening, because as she said at the beginning, the bank statements could be totally overwhelming. One thing that I did years ago, and Cindy taught Justin and I this, or when she said it in the beginning, I was like, I don't know what she's talking about. But she said, hey, it's going to take like 3 years for us to find a rhythm and get the learnings together. And I agree that that was the case. But the first year, what I did is I just opened up an Excel spreadsheet and I made tabs for different categories. I still send this spreadsheet to Cindy and her team because she literally said, like, just show me everything. So I
Yes.
went through that statement. I have a gas tab. I have a vehicle maintenance tab. I have an orthodontist tab. I have a physician tab. I have a property, like our home property tab.
Yes.
I have an income tab. I have like so many tabs across the tab. And I kind of saw these as buckets. And I just wanted to present to them all these expenses, even things that I didn't know were necessarily tax deductible or not, just
Mhm.
to keep track of the spending because it's super helpful so I don't miss anything.
Mhm.
Then they're going to say, oh, we haven't been doing this. We should absolutely. Is there more of these things? So it stirred up conversation on things that I was absolutely missing. And then that spreadsheet is complete. And now I've already started kind of gathering all my stuff for 2026 at the time of this recording. Now I go back to that same spreadsheet and I just start to update the numbers, and my memory is refreshed on the things that I'm looking for.
Mhm. Absolutely. And don't let the category hold you up. I get that's probably my biggest email that I get. I I can't send you my books because I don't know what category to put these 50 things in. So the IRS, I have 20 categories. That's it. They have an update. It still says telephone. It doesn't say cell phone. So we don't have a software category. We have marketing and advertising, but we don't have software. We do have dues and subscription. So I just need you to think about it like what best suits it. And then if it doesn't work, put it all under legal and professional. Or if you're in QuickBooks or some accounting program that says ask my accountant, do that. So if I'm doing your taxes and you send me your financials, I go to that tab that says ask my accountant. I have one gal, she puts everything in that, right? Which is fine because then I just clean it up. And it's simple, but it allows her to move on instead of being stuck. So don't get stuck on a category. It goes somewhere. Now, with that being said, think about your meals and entertainment. So for years, I went to this a networking thing in Goodyear, and it was at the Village Inn. So I was clearly going to get clients, right? So my breakfast I put under advertising, right? So I want you to think about stuff like that. I wasn't going to the Village Inn to have breakfast in Goodyear. I live in Phoenix. I was going to specifically get clients. And that's what the IRS looks for. What is this expense for? And how was it relevant to my business? It was to get clients. That's what I was going for, right?
Yeah.
And I could defend that all day long. So that's what I want you to think of. Think of if you have to defend it, and by the way, you would never have to defend it. I would go for you. But if you ever have to defend it, why or how is it related to your business?
Yeah, so good. Okay, you gave me another thing just to hit on too. Is how do we keep track of these things? And you already alluded to QuickBooks.
Mhm.
I use QuickBooks and have for years because it's for me just an easy place to monitor things. Before that, I just use a spreadsheet myself.
Mhm.
Um, and now we have a bookkeeper that does kind of the cleaning up just because we have multiple
Yes.
businesses. But is QuickBooks your suggestion for starting out, or what's your thoughts around that?
Yes, and it's gotten so much easier. The online version is so much better than it used to be. We all loved the desktop version for 20 years. Now it matches what the desktop version was. And so this is going to be the craziest thing ever. The simplest way, and I don't know our age group, but if you know about a check register, remember I don't even have mine with me, but I still carry a checkbook, but a check register, if you go into your QuickBooks under your register and that's where you categorize your things, it's really simple. Like it makes it simple. Now, I have lots that use Zero. It's the same kind of program. It's just you're comfortable where you're comfortable with, right? QuickBooks is just the easiest, and because of the check register, because that's what I grew up with, um, I that makes me really comfortable because I can use the check register and know exactly what I'm doing.
Oh yeah, that's good. That's a great metaphor. And I think that's probably pretty relevant, even though I don't think I order checks anymore, but I know the check register. Uh for sure. Uh okay, excellent. I am curious about what you feel like are the most missed deductions.
The most missed. Okay, so let's talk about their tips and tricks and their what are missed. And it's so interesting. I go on all these forums and meetings with other accountants and CPAs, and we'll get on there even before the speaker does. And these other accounts, well, I'm not going to do that. And I'm not going to tell my clients to pay the kids. And I'm not going to, and it's like, my goodness, if it's there and if it's in the IRS code, why wouldn't you, right? So, one of the biggest is paying your kids. So, the IRS says that you can pay your kids ages 7 to 17. I think for 2025 it was 15,000 roughly, and I can get you the exact numbers, but ages 7 to 17, $15,000 for the year tax free. They do age appropriate jobs. You have them keep a timesheet. You pay them on a regular schedule. Now, the funny part is, years ago when I first started doing taxes, there was a physician, and he said to his kids, if you can find the money, you can have it. But they never found it. So I'm sure they got it somewhere down the road. So the IRS doesn't say you have to give them the money, but it does. You do have to exercise it going into an account for them. Well, if they're a minor, it's going to be a custodian account. So the activity is they still do a timesheet. You still do the transaction into their account. And then we write off that 15 grand. So if I had 3 kids, like that's a pretty good chunk January that I know I'm writing off for 2026, right? I have a lady that, a husband and wife, and they have 7 kids. And she's like, okay, Cindy, 15 grand for 7 kids. That's a lot. So what we did is we went back through hers and we did the first 3 accounts for kids' activities. Then we did the next 2 for IRS, and then the next 2 we did for vacation. Like, so IRS doesn't care how you spend it. They just want you to exercise the activity because it's your kids. No, you can't pay your grandkids, and no, you can't pay nieces and nephews and the neighbors. It's your children. Now, somebody said, but my daughter's 4 and she's in all our photos. Okay, I have a gal that she was a realtor and her girls were little, but she was doing open houses with the little girls on the advertising. Absolutely, I would claim it. So that's something I want you to watch for. Paying your kids for 2025, it was about 15 grand. That's a great deduction that people miss.
Yeah.
Another one is called the Augusta rules.
I want to go
Oh,
back to
sure.
that a little bit because I think this is super relevant for my audience. Many are moms listening or parents. Um, is the thing that I had a hard time rationalizing in the beginning is, wow, I'm not necessarily making enough money to just regularly pay my kid $15,000 or at the end of the year to give them a big lump sum. What I want you to also realize though is you are probably already paying things and have expenses for your child that are already coming out, like their dance, like their soccer.
Yes.
Already are actually prioritizing those funds. So now just reframing the idea of I'm going to pay them first, and part of paying them is going to reduce my taxable income, which benefits me massively. And then, as Cindy said, you can use those funds, however, which you can reallocate those to the expenses your kids already have. And so that was a super helpful reframe for me.
Yes.
I actually did prioritize that money, but I was like, wow, I'm spending $500 for a month for soccer. I was like, oh, I kind of get that. So
Now I want to make that payment because now it's a deduction over here. Absolutely. Where it wasn't before. Yep.
exactly. And so some things that I do with my kids or have them do is now my daughter's old enough. She makes a ton of social media content for both of us. So does Miller. Miller is out in the shop often helping with processes around Justin's company, like knife making. He can do so many hands-on things now. When they were little, there was organization there was sometimes going through like Google Drives and just organizing for me. I'm just thinking about like what me specific,
Right.
you run an online business. If you host in-person events, if they're getting your items ready, organizing, rolling up shirts, tying shirts, I don't know. Those are just a few I want.
Son, when he was little, like he's so good at the computer, we could have him do computer stuff. He's 10 now, but gosh, 6 and 7, he could do things on a computer.
Yes.
Yeah.
Yeah. So good. Okay. What are some of the other missed deductions?
So it's called the Augusta rule. So the IRS says that if you rented your home out for 14 days or less in a year, it's not it's not taxable income. Okay. So we live in Arizona. We had the Super Bowl here. Out there by the stadium, people were renting our homes for $5,000 for a night. So if I rented my home for 2 nights for 10 grand, I'll bet people claimed it when they didn't need to because of that rule. It's called the Augusta rule. If I rented it for 14 days or less, right? So I took a class, gosh, years ago, 10 years ago in Cincinnati, Ohio. And that's the one takeaway that I got. He said, why isn't every business renting your home from you? So my accounting practice is going to rent my home for 14 days. That's another way that I can put money in my pocket out of my business without having to pay taxes on it. That's a big one. And I would tell everybody to do it, especially when we had the Super Bowl here. We have the Phoenix Open here. Barrett Jackson's here. Like there's enough things that go on in Arizona that every one of us should have the Augusta rule on our tax return.
Yeah, and those of you from who are listening that aren't from Arizona, I am sure there is opportunities equally for you in your, in your city.
Yes. And probably the last one, and this is what I teach. I'm all about education. I want you to know what you're doing and what we're doing. I don't expect you to do it, but I want to make sure you have a pretty good grasp on what I'm doing on your taxes. So one of them is I'm going to always tell you to travel for business. Then we're going to add personal use, right? What that looks like is, so if I want to claim a weekend, I've got to work 4 hours on Friday and 4 hours on Monday to write off the whole weekend, right? Well, okay, but then they say, well, I've got my husband and my kids. Well, in my industry, my husband, him and I have another business and our son works for us, right? My my kids all work for me. So somewhere there's something going on. Now, it's kind of funny because Chelsea's like, Blake, you got to take the kids because my mom and I have to have a meeting, like a legit meeting. And it's so funny because Blake's like, you guys don't have time? And it's like, no, we need no kids to go over some things, right?
Yes.
So if you have your family involved, Meals and Entertainment, Tom Wilwright, he's one of my mentors, and he always talks about this. The IRS allows you to claim reasonable meals. They realize that you're talking to your spouse. So I just got married. I just celebrated my 1 year. But for a couple of years, like every time I came home, I was telling Mike about, oh, Austin and I did this, and what about that? And he's like, what are you talking about? Because he was such a W-2 person, right?
Yeah, sure.
But I was always talking about taxes and what we'd done today and how much money I'd saved somebody. And, oh, I really helped this lady, whatever, right? Okay, while we're at dinner, I'm going to claim that meal. We're really talking about what's going on in my life and my business. The IRS realizes that. So now I have a guy that put $40,000 down as Meals and Entertainment. I think he made a couple $100,000, but I probably am not going to claim $40,000 on his tax return, right? But it goes back to what Amanda said. Give me everything and let me figure out where that sweet spot is, right? But reasonable Meals and Entertainment with your family, the IRS, absolutely. They know that we're doing this. They understand that we're communicating and this is my life, right? This is my lifeline. I just have my family to talk to about it.
Yeah, it's so good. Okay, perfect. What are the things we should never claim on our business account?
Okay.
Or never pay for, I should say, directly out of our business account?
Yes. So I do not want you to pay for your mortgage out of your business account. I do not want you to pay for dry cleaning. Dry cleaning is not deductible unless you're traveling. And then what was my third one?
Groceries.
Oh, groceries. Okay. And then I always get this. Well, I host events. Okay, that's separate. Now, I've been to an audit before. It's been years, but we went through all the food and all the groceries, right? And as soon as she saw personal items on it, Then she went back through and she scrutinized every single receipt. So it's like, okay, that's where you decide. Is it worth a couple $100 that you might have claimed? Is it worth that getting triggered for an audit, or just leaving it off and paying it personally, right? Unless you're really disciplined, and I am not. Like my poor staff, I always get to the register. I'm like, which card? But I try to separate as much as possible. Like, no, this is really office stuff. Okay, we don't have a bathroom in here. We use a public restroom. So there, I shouldn't have toilet paper, but I do have paper towel. We have snacks. Okay, all that's okay, right? For everything that we do and everything we provide our employees and our clients. But I don't have other personal items on there. There's not hairspray. There's not shampoo and conditioner. See those? There's no nylons. I don't know. People wear nylons anymore. But anyway, that kind of stuff. So that's the stuff. That's what I want you to think about.
Love it.
Yeah, and it's okay if you go to the register and we have, a hairspray, but it's one hairspray amongst all this. I get it, and that would happen, but don't let it hang you up. Just don't claim absolutely everything, right? Be reasonable with the IRS, even though we use the hairspray to spray on your hair so you could do the podcast or whatever, right?
Yeah.
Just don't be greedy with it. Yeah.
Yeah. I find that most people are doing the opposite, right? They're not claiming enough
I
rep
think you're right.
than
I would
over
say that.
claiming for sure. So, okay, this information is gold. If somebody's listening, is like, okay, this is so great, but we have a lot going on here. What do you feel like is the first step that could move the needle the most, just to get organized this tax season, or to save more this tax season?
I would go through my bank statements and credit card statements. Now, if you're not good at it and you have a teenager, they probably could do an Excel. I mean, some of the Excel spreadsheets I get are just phenomenal. I can't even do Excel like that. I would go through that and get really familiar with what you're spending your money on, because I just need to see totals. So for you, I only need to see the totals, but you need to get a handle on what you think it looks like, and don't judge whether it's deductible or not, right? Unless you get to the groceries and it's like, well, I feel like this would have been or not. I would say probably the bank statements, get a handle on your expenses, know what your income is, kind of see where you're at. And then this is January. Nope, this is February. Sorry. So I would definitely start 2026 with a good system going forward. If you have a teenager, they can figure it out for you. Just have them go through it.
Yeah, system.
Figure out something. Or there's very affordable bookkeepers out there. If you just need numbers, I would say jump in both feet and just see if you can pull your numbers together. So if 2025 is too daunting, just do January right now. Once you do January, it's like, oh, okay, it's not that bad. And then back up and print your bank statements for 2025 and go through them. If you decide to use QuickBooks, don't use QuickBooks Self-Employed. It'll never count a meal. It'll never count internet. It'll never count. It will not count anything personally spent.
Okay.
So try not to do that. Rather, you just do a spreadsheet then.
Yeah, amazing. Ah, you're such a wealth of information. So thank you for being willing to share all of that, the wonderful details. If anybody listening is definitely interested in learning about you and your team and your services, what's the best way that they can connect with you?
So you can call the office at 602-368-3588, or you can email me, Cindy, CINDY, at SBA. So that's Sam Boy Apple -or tax.com.
Perfect. And if you're listening, we'll drop all that in the show notes too, so you can so yes, of course, if you're driving or out for a walk and listening on the way. But Cindy, thank you so much. I know Justin and I are so grateful for you, and you give us steadfast confidence each year that we're not going to have any tax surprises, and we can plan accordingly. And I feel like it's just been such an asset on learning how to make our money like work more for us. Like there's a lot of risk when you run a business, and it's wonderful sometimes to just like have somebody in your all the time, actually, to have somebody in your back pocket that can help you maximize, your profits. So thank you.
Absolutely. Thanks for having me. I appreciate it.
Super fun. Thank you so much. And until next week, go coach 'em up.